the real play here for Netflix is to chase those advertising dollars.
How much could it actually help? Like, what kind of numbers are we looking at? Like X amount of its revenue now that could be X amount in 5 years.
So right now the revenue is de minimis, right? They launched the advertising tier in November of 2022, kind of had a really, really slow start. But the most recent number that they reported was 23 million monthly active users. So we think that translates roughly to about 12 million or 13 million subscribers on the ad platform. Ultimately, what we want to be able to see for scale, we know that Amazon Prime is actually launching, I think just in a few days, they're kind of launching video ads on Prime Video. And the audience right off the bat that they've kind of cited to advertisers is 115 million. Wow. So what you really kind of want to see is 50 million, 100 million. That is really kind of the captive audience, the critical mass that we're looking for. In terms of how much can advertising potentially be, so right now Netflix is about a $35-40 billion business. I think if it takes off in a big way, probably in the next 2 years, I wouldn't be surprised if advertising made up about 10 to 15% of Netflix's revenue.
Yeah, that's a lot. So, Geetha, is this maybe the first step, dipping the toe in the pool of maybe becoming a bigger player in sports overall? That, again, they've kind of resisted and been very adamant about they don't have an interest in sports, maybe because of the price tag. But is this maybe the first opportunity here?
I definitely think so. Yes, they have spoken about the price tag. Again, this is, definitely a hefty price tag. It's $5 billion over a span of 10 years. So they're spending $500 million a year. But again, they're not necessarily betting the farm, right? Because if we wanted to see Netflix do something transformative, it would have to be like maybe buying a gaming studio, which would be upwards of, 15, 20, $30 billion, or maybe just buying a film studio, again, which would be a huge price tag. Of course, sports rights are also expensive. This kind of, I think, allows them to dip their toes a little bit. It's still 500 million. It's not some crazy number like, what some of the other big media giants are paying for sports rights. You look at Disney, they're paying upwards of $10 billion just for all of the sports rights that they have. So I think relatively it's a way for them to kind of experiment, test the waters, see how it plays out. And then remember, on that 10-year deal with TKO, they do have an option after 5 years to kind of walk away from the deal if they're not happy with how it's playing out for them.
But still, I mean, for TKO, like, it's kind of double what they were getting with regular cable. So how much is the content spend concern worth to the share price of Netflix?
Oh, definitely. Content spend, I think, is definitely going to be one of those, worrisome factors for Netflix. But having said that, okay, so they have said that they're going to spend $17 billion this year on content. Obviously, it's probably going to go up to about $20 billion over the next couple of years. But then look at their free cash flow profile. They're throwing out $6.5 billion in free cash flow in 2023. That probably goes to about $10 billion in the next few years. So they do have a lot of cash at their disposal. They did say that they're going to buy back shares, but we also want to see them invest in their business. And so this is a great way that they're investing in their business. Ultimately, I think to build up their advertising business, it's not just content. They're going to have to invest in their tech stack, in their ad tech stack a little bit more, to kind of really get more traction and more scale.
All right, Geetha, let's step back a little bit on the streaming business here. You just, threw out some big free cash flow numbers, which, boy, I remember the days when they had negative free cash flow and they were just trying to get the positive free cash flow. How about the other competitors out there? What's the feeling? We're 2, 3, 4 years into this whole streaming business here. Is there room for other players here? How do you think this might shake out?
Yeah, Paul, I think, the streaming wars are definitely over at this point, and we know the winner is Netflix. They've just completely decimated the competition, if you will, whether it's in terms of subscriber growth, but more importantly, subscriber growth doesn't really, it's important, but it's not the be all and the end all. What the street is really focused now on is the financial side of things, is the profitability metrics, and Netflix has kind of absolutely blown it out of the park. And so as we kind of look at, what we're kind of trying to see is the margin profile. So right now, if you look at Netflix's streaming business, it's a 20% operating margin, but they have committed to about 300 basis points of average annual increase. So just push that out another 3-4 years. Very soon, we could be seeing upwards of 30% operating margins. Can any of the other players, like a Disney, like a Warner Brothers Discovery, replicate that? They did have those margins in their cable TV business. Unfortunately, in the streaming business, it's going to be a really, really long haul. We do think that they could potentially maybe get to, 10%, 15%, but it's going to take them a very, very long time. And who knows how the whole landscape is going to shift by that time.